Hi, today we're going to talk about why many single-family, multifamily, and other real estate investors are turning to mobile home parks to maximize their income and expand their wealth. Hi, I'm Paul Moore with Wellings Capital. We're a commercial real estate investing fund, and we love mobile home parks. Now, you couldn't have told me a few years ago I'd ever want to invest in mobile homes again, because I owned 4 of them in the past, and 3 were a complete disaster. I don't even want to tell you what a mess it was. I can tell you that I still own one, and I still regularly get calls and texts from the tenant saying they need $1,200 to fix their transmission so they can start paying their rent again. It's a disaster. But what I found over the years was some of the smartest investors I know, people like Ryan Smith, Jeremy Roll, and famous investors like Sam Zell and Warren Buffett love manufactured housing. They love mobile home parks. And I had to ask myself why. What I found out was investing in mobile home parks is very different from owning mobile homes. It's more like owning land and operating a business that's land-based rather than owning the mobile homes themselves. You don't have to deal with toilets and 3 a.m. calls and all kinds of things that you have to as a single family home or a mobile home owner. So let's talk about why Wellings Capital loves mobile home parks. First of all, they're very recession resistant, okay? So in great times or in bad times, people in affordable housing need a place to live. It's the least expensive alternative that most of them have, and so they've been very steady through great cycles and down cycles. Mobile home parks have been very steady performers. Now, it's the only asset class that we know of that actually has a shrinking supply. There are less mobile home parks in the US every year. But if you've looked at the news, you'll notice from the affordable housing crisis that there's a greater demand for mobile home parks than ever before. So with the aging population, with people having more and more part-time jobs, there's a greater need and a lower supply. This has provided a great opportunity for mobile home park owners. Now, there also are very, very high switching costs. Imagine you're in a mobile home park and they raise your rent by $30 a month. You're paying $300 a month, they raise it to $330. Or let's say you don't like the manager. Are you really going to spend $5,000 to have your mobile home move down the street to save $30 a month? Or are you going to spend $10,000 or even $12,000 if you have a double wide to move it down the street? Probably not. It's almost impossible for people to leave a mobile home park unless they abandon the mobile home and leave it behind, and then you get the home back, you fix it up, and you sell it to somebody else. Now, mobile home parks, much like self-storage, are a very fragmented market. A recent study I saw said only 1% of mobile home parks were owned by institutional investors. That means up to 99% are owned by independent operators, and a lot of those are mom and pops. Now, those mom and pops typically operate these like a passive piece of real estate. You know, the old mindset of if you build it, they will come. And that worked for a long time. But mobile home park operators that can acquire these mom and pops and upgrade them to institutional standards are making a lot of profit right now. And this is where the profit formula comes in. Because in residential real estate, the value of your property is limited by the comps, the other homes in the neighborhood. In commercial real estate, we'll find out in a minute that the value is the net operating income divided by the cap rate. And like I said, we'll talk more about that in a moment. The opportunity for you is either to acquire a mobile home park and become a world-class operator, or to invest with one like Wellings Capital does. Another thing I love about mobile home parks is the maintenance cost and the capital expenses are very low and very predictable because it's mostly land, sidewalks, parking lots, and utilities. One other thing about mobile home parks is there's less competition for investors and owners because of the stigma of manufactured home communities, of mobile home parks. Like I said, I didn't like them. I don't like to own them, but I love investing in mobile home parks. Robert Helms from Real Estate Guys Radio said, "Live where you want, and invest where it makes sense. And that's what we're doing. Did you know that 10,000 baby boomers per day are turning 65 years old? Here's the amazing statistic. 1 in 3 have exactly 0 saved for retirement, and about half have less than $10,000. However, statistics also say that about 60% of them have some home equity, and a lot of them are willing to trade that home equity in to buy a mobile home and move into a mobile home park where they can live for, say, $300 or $400 per month. Now, I talked about the residential versus commercial value formula. Residential is limited by the comps in the neighborhood, but the commercial value formula is the value is the net operating income divided by the cap rate. Now, the cap rate, or the capitalization rate, is the ongoing rate of return that investors expect for that type of asset at that time in that geography. So a cap rate might be anywhere from, let's say, 5 to 8% in a normal market. Now, if you can increase your income and compress your cap rate, you can dramatically improve the value of the asset, but leverage takes it a step further. Let's look at the value of $1 income to the bottom line. Let's say you can increase your revenues by just $1 or decrease your expenses by just $1. $1 increase to the bottom line per month is $12 a year. I was really good in math. And now you divide that by the 6% cap rate, or 0.06. That $1 per month, $12 per year, becomes $200 to the value of the asset. It's much like a PE ratio, the price to earnings ratio in a stock. Now, if you can increase the value of your asset $200, then use leverage, the effect to the equity investor is 2 to 3 times as much. So what type of value adds can you do at a mobile home park? Well, you might be able to raise the rents $20 or $30 or even more from the mom and pop level when you take it over. You may be able to add sheds or carports and charge $25 more per month. Or you might be able to do what one of the operators that we invest with did. He took an acre of weeds, he paved it, he put a fence around it, and now he's leasing it out. And he's saying that anybody in the community that has a 3rd or 4th or 5th car has to put it there and rent a space. If you have a boat or RV, you have to put it in there and rent a space. He cleaned up the community and he created an additional revenue stream of up to $10,000 a month. Let's do the math on that. $10,000 a month times 12 months is $120,000 a year. Divide it by a cap rate of, let's say, 6%, 0.06. That's an increase in value to that community of $2 million, okay? Just from that one change. That's without raising the rent or adding sheds or carports or doing anything else. $2 million. Now let's say he paid $5 million for that community. $3 million of debt, 60% ratio, right? 60% loan to value. $2 million of cash, $5 million total, okay? He's got $2 million cash in. He just raised the value by $2 million more. He doubled the equity investor's money with one change. You can see in commercial real estate, and specifically in mobile home parks, why the value formula is powerful and why a lot of people, including our company, love investing in mobile home parks. I'm Paul Moore with BiggerPockets.com. Happy investing.